Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I am Dustin. This is the show where we review the most active stocks in Yahoo Finance every single day. I'm going to go ahead and look at what we have today for the most active stocks. The most active today in a shocking move because when you look at it based on volume, you generally will see stocks with over 200 million shares traded, but very rarely are they going to be stocks like Ford. Looks like Ford was the most active stock in Yahoo Finance today with over 290 million shares traded today, which is a remarkable. If we start to get into what Ford actually did, though, it is an interesting move. The reason why is because essentially we've seen Ford do nothing for the past year. Even if we look at it on a longer trend, yeah, the highest high that we've seen was back here when the close was at 1455. Today we're only closing at 1256. If we do a little bit more zooming in to get an idea of exactly what's been going on over the past 6 months, we can see that while yes, today was an amazing day, it was up 4.75%, it is not really moving. Now, thinking about what's going to happen going forward, the thing that I like here is I can see the sell top went from 1277 to 1288 today. You can see a little bit of inflection in the top of the range. And for me, that is a very good signal, especially when you've got the green bars underneath, which represents bullishness. If we go ahead and look at the actual candle chart here, we can see that very recently we've seen a very much, a high of 1280. We can see that we've seen a little bit of a pullback. And now it looks like even today we didn't hit that 1280, but it looks like we're marching in that direction. The thing that's really supportive here, again, with all the volume that we've seen, is the fact that this is the highest volume that we've seen over the past 6 months. The average volume that you're seeing over the past 6 months has only been 80 million shares. Today, we're seeing 290 plus million shares traded. When we're looking at the actual daily sentiment, this is an indication of bullish and bearish price action. Essentially, you have to think about it from the perspective of every single day, you're going to have bullishness and bearishness reflected in the price action. But because it's only at 100% in terms of the range, how much of it is bullish, how much is bearish? Here, what it looks like is what we're seeing is essentially that we've got the move where we are at 56% bullish on today. We've been above the 50% line, but we're not crazy bullish, which is good to know. On the 15-day, we're at 58%. Now, this indicator, generally, if you look here, it'll get up to the highest would be about 70%. The lowest would be about the low or the high 30s, like you're seeing here, 37%. So this is a very good place, in my opinion, if you're expecting that there's going to be a trend to take a shot. Now, the problem is that you don't know how long something's going to trend. Now, when I'm looking at normal volatility here, I think that trends start to happen when you have falling volatility. The problem that I see with Ford specifically is that we have falling volatility, but it looks like it's starting to break back out. We do have a negative price correlation, which is actually very positive because a falling volatility with a negative price correlation, two negatives there generally make a positive. So you'd expect that the price is going to continue to go sideways to up. The concerning thing today is that even though we saw it go up 4.75% today, that was a crazy amount of volatility relative to itself. You can see we're seeing volatility break out even though the price is going higher. This is essentially like it'd be like a glacier collapsing upwards. You know what I mean? Or like an avalanche happening up. But the idea here is that the volatility is essentially telling the exact same story as if you saw a major drop in a stock. The thing that I'd say is the most probably concerning from the from the position of this current moment is that if we look, we've got a red background with black lettering. That means that we're moderately high. Doesn't necessarily mean we can't be extremely high very soon, but we were extremely high in terms of the volume. What I like to see though is that we are well above that trade level. We have been bullish for a while. We've got a higher high on the top of the range as I was pointing out earlier, and we are positive on a 1 day all the way to a 1 year. I love the fact that we're only positive 7% over 1 month and barely over 10% over the past 3 months. That tells me there's a lot of room to run because some of the stocks that we look at are definitely going to have a lot more movement. Let's go ahead and look at BigBear.AI. I've looked at this. I've looked at this company a few different times. BigBear.AI is one of those stocks that is currently just riding the thematic trend of AI in the market. It's important to always be aware of what type of market are you in terms of what are the themes. Sometimes it's electric vehicles, sometimes it's quantum computing, sometimes it's AI, sometimes it's social media, sometimes it's just chips. It doesn't matter really what the specific thing is. You've seen companies go through it like Square, you've seen it when it was like Cash Apps or things like that. The moment in terms of the theme is most important. And you can see when you have companies like this where you're getting vol, where essentially you're seeing massive breakouts, like we saw here in June. We see the expansion of the range. The expansion of the range shows that there's a higher move in the volatility. We get kind of a narrowing of the volatility here where the top of the range starts to come down. It turns bearish for a little bit. We've seen a breakout very recently into September. You can see even in October, back on the 14th, we hit a high of 890. The top of the range is at 904, but it is starting to come down. Right now, the top of the range is at 905. Very recently, it was just 911. So if we're looking at where the price is, in my opinion, and again, not financial advice, but the way that I'm looking at this is a great place that I would like to take a position inside of Big Bear AI. The reason why is because it's in the middle of the range. It's essentially in the very middle of the range. And if we go all the way down to the to the data, you can see we are in the middle of the range because we have green background with black lettering. I mean, this is the normal part of the range. The problem that we have is that it's slightly below its trade level, but it is still much very bullish. And I like that. There are other negatives that I would say is that we are now negative on a 1 month and a 3 month. I think that's super, super important. You want to be positive, especially on a 3 month. Generally, actually, especially on a 1 month. But when we look at the type of moves we've seen in BigBear.AI, recently you've seen a big move, comes back down to consolidate. So we get a nice move. The unfortunate part is that this didn't break out higher than the previous move in January. You get a little consolidation, a continued big move. This did break at least a little bit higher than the previous move we saw in the middle of the summer in June and July. But if I was going to be taking a position, this is exactly where I would think that would make the most sense. Excuse me. I think $7 makes the most sense to take a position. Obviously, the low is at 692. I mean, you might be looking at, if you're just like a chartist, you might use the low here at 633 or maybe the close at 652. Somewhere between 652 and 633 is probably where I'd say is going to be like my absolute true stop. So that would be where I'd set a position that I have to get out. The thing that I like about the move we're seeing is that, yes, even though the volume is above the average, the volume is significantly lower than we've seen when we've seen these breakouts. We've seen some very high volumes, over 200 million, over 200 million. Today, yes, we're starting to fall, but we're getting a little consistency. It was only 126 million shares traded. We look at the sentiment. We've definitely come off of the peak in terms of the daily sentiment. We were up at 63%. Today, we are at 51.3, but it's still very positive. That's holding above that 50% line. Even on the 15-day, we're at 52.2. Not saying that's necessarily going to break out from here by any means, but at least what we're looking at is something that is holding steady around that 50% line, which shows that bulls are really holding their ground. The thing that I love, as I already alluded to in Ford, when it comes to what is a potential breakout, is we're starting to get falling volatility here. So this falling volatility, along with having essentially a pretty much neutral correlation in price to the volatility, tells me that we could go sideways to up. The reason why is because it's very easy for correlation to price to go negative. I mean, if the correlation to price and the falling volatility goes positive, that means the price is going to be falling just pretty slowly, but still like dripping slower. Don't want to see that. When we go ahead and look at the data again, we are well below the trade level. We still maintain our bullishness, which is good. We're on $7. $7 is a price that back here in the early part of October, before it went to nearly $9 or 888 or 880, that you would have killed for. So when I look at the price moves that I'm seeing inside of BigBear.AI, I don't think that the theme of AI is going away. I don't think that this stock is necessarily going away in terms of its hold on, like, just, I don't know, factor traders, small cap traders. I don't know. The volume that we've seen over the past 3 months is 94 million shares. Right now, we're seeing still 125 million. It's got a $3 billion market cap that could easily triple. It could easily go to 12 billion. I don't know how that would happen. I don't read the news on BigBear.AI, but I do see that there's an opportunity here. So if we take a look at the next one, I'm super curious about Plug. Plug. If you have traded the markets long enough, Plug is one of those stocks that you've definitely lost money on it. The reason why is because Plug is notorious for the type of moves that we're seeing here. You see where you get a very tight range, where you're getting some moves that like people kind of get excited about. There's like message boards, like what are they going to do? Are they going to be in fuel cells? Are they going to make free energy? Are they going to do nuclear reactors? Is this a new utility company? No. Okay. I'm just going to pause right there and just let you know, no. I don't know what this company does except for the fact that they are really good at pumping and selling their shares. Like at the end of the day, Plug is a penny stock. Right now, this thing is $3.12. It was doing 8.24% today on a market cap of $3+ billion. Terrifying. The thing that I like in terms of the setup, now getting away from the actual company, the thing I like about the setup is that we've seen this break out to the top of the range, consolidate, and then usually move to the top of the range. Now, very similar to what we saw here in September, break out to the top of the range, consolidate, break out a little bit, break out to the top of the range. The only concerning part in terms of the range is that the range clearly has peaked. The top of the range is clearly 488. We're down at 483 now. The bottom of the range is coming up, which is very positive to see. We're maintaining our bullishness, but I'm going to need to see some sort of reversal here. Maybe it closes this gap if we're looking at the chart where the high here, it looks like was 296. Maybe it comes down, closes the gap. I don't know exactly what today was. If we look, the low is 305. So it didn't break threes. The thing that is really positive in terms of what we're seeing, even though the price is going down, is that we're not seeing a ton of volume. So even though the price is coming down, the volume continues to be below the average. We got 196 million shares traded generally in terms of the most recent average. Obviously, it's going to be skewed based on these crazy days that we've seen, especially back in April and May when we were really, really high. 100 million shares is not anything to sneeze at, but when you're talking about a stock that is only $3, and the type of chatter that you can get in a market that's essentially what, 0.3%, or maybe not even a full 1% away from its all-time highs in pretty much any of the indexes, Plug is giving you what I believe is going to be probably a nice setup when we get some sort of huge catalyst. Maybe when the government opens, maybe if I don't know, something happens where people are going to like it again. But the move that I like is that we're at 50% bullishness, 50.1 to be exact, on the daily sentiment indicator. On the 15-day, we are at 47.4% bullish, which is obviously not fully bullish in terms of being above 50%, but the type of move that we're seeing that is kind of hovering around the 6% line is very encouraging to me because that's showing that bulls are really starting to actually defend the line. Also, as I continue to mention in Ford, I love when the volatility is falling over. I would love to see the volatility start to fall over. The price just kind of tick, 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 and then it just goes and goes to a rocket. Now, I don't expect a rocket to like $100 or anything like that. Like this is plug. I mean, this thing at max is probably going to $9. I mean, I'm not saying that's not possible to break out. Maybe there's a short squeeze, maybe there's something I don't know about in terms of market dynamics. But if we're going to be honest about what's been happening in plug, it's $3, and for the past year, it's up 31%. I mean, what was that, $2 a year ago then? Like, actually, no, it'd have to be even less. Actually, even more. But like, what we're seeing in plug is now, if we look at the price, it's in the normal range, right? It's in the normal range where you want to buy it. It is right below its trade level. It's got a higher low, as we already alluded to. At the top is at the bottom is rising. The top is coming down at 483. I mean, if you bought at 312 and got to 483, you'd be pumped. Okay, just let you know. The concerning thing and the very painful thing for anybody watching this who's been holding this thing for a week is that you're currently down 22.9%. So to be down 23% on your money in 5 days, I mean, you might as well just buy with zero DTE options on friggin' Bitcoin at that point because, well, actually, you shouldn't. And this is not financial advice, but you would be looking at something that's going to have ridiculously high volatility. At least if you own common shares, you still have most of your money. You know what I mean? Like you still have what, like 80, and you have 78% of your money. You know what I mean? Like you'd rather have 78 cents out of a dollar than zero, which is what happens if you do zero DTE options on something like this and it goes that way. On the 15-day, it's still up 33%. On the 1 month, it's still 23%. I expect that that's still going to come down. You want to make sure that this stays positive on the 1 month, but obviously it was up 141% just like a little while ago. So I don't think the move we're seeing in plug is necessarily crazy. I'm actually very encouraged because when I look at the range, it's right in the middle again. So I'd be looking for a catalyst. And to be honest, it's kind of like Big Bear. I might take a position in it. Let's go ahead and look at Bitfarms. Bitfarms. This here's the thing. Before we get even into Bitfarms itself, if it has anything to do with Bitcoin, you need to be honest with yourself about what's actually happening in Bitcoin. Like for real, for real. Like let's just very quickly go ahead and look at Bitcoin because if we're going to look at Bitfarms, we have to pay attention to what's actually happening in Bitcoin. And the concerning thing, if you're going to look at Bitcoin, is this. Like this chart is 9 months worth of data. I can go back a year. Yeah, over a year, this thing is up good, right? I mean, if we're going to be honest, if we're going to look at the 1 year rolling return, this thing is up 12%. So that's like not actually that crazy good. But again, influencing Bitfarm, you have to understand what's going on in Bitcoin. Now, looking at this, I'm going to do the 6 month chart just because it's probably a little bit easier if you're on your phone. But if we're looking, this thing went bearish, at least by my signals. Everybody has their own opinion of like what is full trend, if it's bullish or it's bearish. The way that I'm seeing Bitcoin right now, that Bitcoin went bearish on 1010. It went bearish when it closed at 112,976, $112,976. This thing has essentially been riding the bottom of the range, and now we're at $109 or $109,117. The top of the range, while yes, it's still breaking out higher, that's really only a reflection of the volatility that we've seen, like on the 10th when you saw this massive drop down. The volatility is driving the top of the range higher, but if the price doesn't go up higher, it's going to start dragging it down. And the concerning thing that I really see is that we're getting a slight glide in the bottom of the range, which now is under $100,000. Like the bottom of the range hasn't really been like since the summertime and back when we were talking about in May when the price was under $100,000. So the idea that the bottom of the range is now slightly diving below 100,000, the sentiment is bearish and Bitcoin is now under 110. Super concerned. I'm in full disclosure, sold all my Bitcoin. I'm just gonna sit in USDC until like we get like a proper move. And I don't care if I miss something. The moves that we've been seeing in Bitcoin they've been horrendous. And I don't mean from the sense of like you haven't been able to catch actual up moves or down moves, depending on if you want to short. I'm talking about horrendous that when you look at it over the course of 6 months, you're not trending. Like, look at the price is $109 right now. 109,000, same price as it was in May 22nd, 2025. Like, not saying that that's like if you're a great like specific trader in terms of like a channel or trend trading or whatever, But this is hard money to me. I don't view this as easy money. I want a trend. I want something like we'll look at NVIDIA later. I want NVIDIA. I want easy money. I want low volatility bull markets. Bitcoin is showing you very clearly that it cannot figure out, are we going to be bullish or bearish? Since essentially it looks like July, this thing has not gone above 55% or below, and if it's shown anything, it's shown more bearishness. Down at 42% bearishness or bullishness back here in September. I mean, even on the 15-day, like you're getting these waves, which I don't have a problem with getting waves, but I'm not. I'm what I'm seeing is like even on the 15-day, we're at 40% bullishness. Back on the 27th, we're at 39% bullishness. We're at 36% bullishness. Yeah, we saw 60%, we saw 62% bullishness a little bit, but there's nothing convincing to me in terms of what's going to happen in Bitcoin here. And I'm going to get back to Bitfarms in just a moment, but the thing about this is that when you look at Bitcoin, we are we are at the moderately low part of the range. We have been bearish. If you look at the day sentiment, we have been bearish. It looks like since again the 10th, when we were at $112. If we look, even that bullishness that we saw here a little bit at the end of September, the middle of September, that's not convincing. There's nothing convincing about that. Why would you think that's convincing? I mean, even if you don't care about the sentiment, just look at the trade level. Are we below? Are we below if it's red? Are we above if it's green? Right? We have essentially been below more than we've been above recently. The bottom of the range continues to break lower. Like I said, it's it's under $100,000. It's at 99,000 right now. On the 3 month, 1 month, 15-day, and 1 day, we are negative. We are barely positive on a 6 month rolling return. We are when and I'm gonna use the term barely positive on the 1 year, but that's only because it's Bitcoin, because you can see like this thing was up 20%. I know Bitcoin has the ability to be up 40%, 50%, 30%, 55%, like on a 6 month or 1 year rolling return. Like back in July when it was at $119,000, which is $10,000 higher than it is today, it was up 55% on the 1 year. We have now gone down to 12% up and negative on most of the rolling like performance metrics. So that is what I want to review in terms of just looking at the way that Bitcoin is relative to what Bitfarm is doing. And the reason I'll go ahead and look at Bitfarm now, or Bitfarms, whatever this. Apparently, you have more than one place that you have your bits, is you have it on farms. I don't know if you're out there just like, well, you wouldn't be mining. You wouldn't be mining on a farm. That'd be a mine. It'd be called bit mines, which would be called like, what are you shucking bits? I don't know what you do on bit farms. I don't know how much acreage you got with your tractor. What good? Do you have a John Deere? I don't even know what you'd have in terms of. You'd probably be a Coinbase John Deere, like a Coinbase tractor, just out there just farming my bits. But if we're looking at what is going on here in terms of this price, this is reflective, not necessarily what's going on in Bitcoin, because this is a much stronger trend. Like you can see in Bitfarms, we went positive in the middle of July. We've essentially stayed positive ever since. I do like the way that the price has been moving, where we're breaking out above the top of the range, consolidating, breaking out back above top of the range, consolidating. The concerning thing is the volatility is so ridiculously high. We've already seen the top of the range kind of roll over, and then the price continues to like scream higher. We look at these charts, or we look at the candles. There's not really much concerning here. While the price has been falling, the volatility or the volume's been falling as well. This run up saw a very high volume, which I really like. I like the fact that the highest volume that we've seen was on the day that it was really high. We look at the actual sentiment. It's an interesting move. No lie, no doubt. If we're looking at it from July, we've been above the 50% line, except for this like little bit where we have to pretend like we didn't see that. It's the middle of August, but the rest of the time, it's essentially been breaking out. We've hit all the way up to 67.3%. We're falling down now. It's at 58.0%. It's interesting. Now, if we're looking at the rolling sentiment on the 15-day, we've had a high of 72%. Like this is that kind of move, by the way. When it's at 72.7%, that's the type of move when you see when it's like, oh, it was up like 15% today, bro. It was up like 22% today, bro. Made so much money in my zero TT options, bro. Yeah, well, the other side of that is that when we get that this bounded indicator up at 72%, it's gonna fight to come back down to mean, it's like called mean reversion, brah, where it's gonna fall back to the middle, brah, and it's gonna go to 50%. So when we look at the type of moves that we've seen, positive, very, very positive. If you bought on the lows, the negatives that I'd say is that the volatility that we're seeing is insane. Like normally you're going to see very easy volatility where like it's going up, it's going down. It's like waves because it's a sine curve. You can a second derivative. Take a pre-calc class, you'll learn a little bit more about this. But if you look at it, what we're seeing now is we're seeing an acceleration from the top where you thought it was going to roll over. That's kind of scary. And the reason why that's scary is because you're seeing the acceleration. Well, you've got incredibly negative price to volatility correlation. So what's happening is the higher the volatility goes, the lower the price goes. And that is obvious when you start to look at the type of moves that we're seeing. They're incredibly sharp and then they're very, very violent down. I mean, the close here was at 647. Today we closed at what, 449? I'm sad for you if you're watching this video and you've been holding because over 5 days you're down 23%. Yikes. Okay. So if I was looking at Bitfarms in like a real way, if I was thinking about it from like an honest perspective, I'd be looking at it and saying, okay, right now, Bitfarms is in the middle of its range. It's got a green background, black lettering. It's at 449. The trade level is still at 396, so we could still easily lose 50 cents. Easily lose 50 cents, which is clearly more than 10% here. So you could still be down like 11, 12, 13% and be like right on the top of the trade level. That's a concern. The positives, if I'm going to be honest with you, is that while we've seen the price falling, the volume is in its normal range as well, right? Like that's positive. We've maintained our bullishness because got to fight for a bull there. You know what I mean? Got to fight a bull. We do see the top of the range is continuing to break out, which is very positive, but we're still crazy high in terms of the 15-day rolling return and the 1 month rolling return, and even the 3 month. I mean, this is if you watch my video from last week, which also I'm going to say if you made it to 20 minutes, I'm still covering this one. Subscribe. You can see that I covered Bitfarm 6 days ago. Um, this is the type of move that's going to take a while to work out. Not because there's anything wrong with Bitfarm, not because there's anything wrong. Well, there's something wrong with Bitcoin. We've already covered that, but it's because it's how are you gonna be up 200 plus percent? How are you gonna do it? Like, yeah, you could easily fall back here, but most likely what's gonna happen is you're gonna come down. You're probably gonna maybe hopefully you don't test this. People will hurt themselves if we test 320. But if you come down here, go sideways, and then you have a chance to go back up. Like, let's say we make it like people would love right now if we went down to like again $4 and we went back up to $5. Now that doesn't sound like much, but that is up 25%. You know what I mean? So going down to four and then going up to five, that would be huge. That would make that a lot of people would be pretty pumped. Some people would still be pissed because they bought up at 624, but maybe we get there someday, kid. So if we're looking, I would be honest that I'm looking around where that trade level is, be very honest about where we're gonna be. If we get another day, day and a half of like down tape, I'd be very interested, especially if we start to see Bitcoin start to really change. So Bitfarm, good luck with that one. Let's go ahead and look at NVIDIA. NVIDIA is one of the most fascinating stocks that exist because in my previous videos, I've definitely talked about how this is essentially it's like the king returning from battle. I continue to say that, and the reason why I say it is because NVIDIA was so positive for so long here from May, June, July, August, and then the middle of August, something bad happened, and I'm not quite sure. It might have been China, it could have been Trump, could have been news, could have been the company. I honestly have no idea. But we started to see a little bit of a flip when we got into it. Looks like October here. October 7th, we flipped positive. At $167 was the buy bottom. At 185 bucks, we were cruising, baby. We felt good for 3 days, right? We were about $192 close. I said, if you watch my videos, I said we need to close at above $190. We need to be cruising to 200. We are now back at 181. While yes, we're still positive in terms of our bullishness, the price is just, there is a change in character here. I mean, this low volatility bull market that we saw through the summer, the kind of low volatility chop here, but this change, even though it's bullish, these are big down days. Like these are substantial down days, like back to back to back. And when we start to look at the volume, there is nothing convincing me that we're seeing a major transition back into NVIDIA in terms of like bullishness. The volume is not supporting it. The sentiment is honestly barely supporting it. You can see back when we were at the 50% line on NVIDIA, which if you think about this again, if you're just not watching this part of the video, the every single day there's going to be a fight between bulls and bears. It's going to be like what percentage is winning the day. Some days it's more bearish when you have more bearishness, when you have 58% bearishness. Some days it's more bullish when you'll have like 57% or 60% bullishness. Right now we're only at 53.1, which I like. I like because it's bullish. I like because it's bullish. When we look at it on the 15-day, though, we can see that it's falling. That's not great. It was at 58.2. Now we're all the way down to 51.8. If it continues to fall, I'd have some concerns, especially because the price has not really been cooperating. If we look at the volatility here, I want to see the volatility fall. I do not like green eggs and ham, but I really do not like when volatility falls and price correlation goes positive. I do not like. The reason why is because that is a recipe for your price going down aggressively. And when it, and not necessarily like in one day, like again, when you have falling volatility, but you have higher price correlation, it's going to go down like 32 basis points, 81 basis points, whatever, but it's just going to grind you up. Like, yes, we're up 63 basis points over the past 5 days, but at $81, we are below our trade level. Yes, we have a higher low. Yes, we don't have a higher high. Yes, we're seeing the price fall on lower volume. Those are all good things. I would like the bullishness to remain. What I'd love, and you don't get to control what the market does. You just kind of react, respond, and do what you do your thing. Um, I would think that we would want to see the price close at least above the trade level, so probably at like 184. I would like to see the top of the range go definitely above like 196, it looks like, because that's where the higher high was previously when it was rising. Now we're down at 194 for the high. Don't like that in terms of the longer term outlook in terms of NVIDIA. But if we get any close in the 170s, like I'm out of this thing. Like I am out of this thing. I might make an exception for it to be in like 179, but like I am out of this thing if we start to close in the 170s. Because first off, there's nothing indicative to tell me that we're going to see higher highs unless the top of the range continues to break out. Secondly, I could be buying anything else. Like I could like well, let's look at AT&T because AT&T, while it's not a great stock, good yield, decent trend. At least it has been. Ooh, not anymore. Sorry about that. AT&T is not looking great anymore. Yikers. What is happening here? Telecom nowhere. It's interesting that when we look at it over the past 9 months, we had a very nice run here. We had a very nice run from the beginning of the year when it was at $24. Made it all up to 27. It's got 28. Essentially, it's been going sideways ever since. Yeah, we were getting at 28.30, 28, 28. Did we get up to 30? We got to 29.44 on the 21st. We got to 29.54, and then we've essentially seen whatever this move is that's happened over the past. It looks like ever since the 19th of September, it's essentially been down and to the right, which is not the direction you're looking for. That is the bull market left like somebody's dad going to get milk. You know what I mean? Like this is from $29 when it went bearish. That was the first day, it was on the 919. We've essentially seen it break down 27, hit 25. This thing already hit 25, 25.87. Yeah, and now we're at 26 again. This is the spot where I'd be shorting. Like I know today it was only down, it looks like, yeah, 19 basis points. I would be shorting this. I'd be shorting the shit out of this. The reason why is because the reason why it's showing up here because the volume was so high. You see, you had 93 million shares traded, which is significantly above the 34 million, which you can see, like even my thing, like I see the 94 and 94 million shares traded today. Looks like the average was 33 million over the past 6 months. The bearishness is noticeable. I mean, we saw bullishness at least back in August. Like that move, it doesn't do it justice. Like I need to do like the 3 month thing. Like it just doesn't do it justice. And this is not working. It's working, but it just doesn't do it justice. But this move here in August was insane. Like this move that we see is represented perfectly in the sentiment chart. You can see the green. You can see we got up to 71, 68, 68 stayed. And then you start to see we break down below, and now we are just having trouble, right? Like you can just see we're at 58 or 52. We got all the way up to 80% in the middle of August. We're now down below. This move, even like off of the bottom, what we're seeing, we got up to 53%. Now we're at 50.2. Oh, this is bad. The reasons why it's bad is because the custom volatility looks like it's about to roll over. And if you watch my other videos, I always say that volatility rolls over when trend is starting to break out. The reason why trend starts to break out when you have lower volatility is because that is just how money likes to move. Money doesn't want stress. Money doesn't want trend. Money doesn't want you fighting. Doesn't want drama in the house. You know what? You know what money wants? Money wants slow, steady gains. And when volatility rolls over, like that is an ugly move because especially when you got this kind of setup, what's going to happen is the correlation of price is still going to stay high. The volatility is going to start to fall, and things are just going to get uglier and uglier. Like, look at we're in the middle of the range. Great, the volume is so high. We've been bearish. Like this bearishness has been it's ever since the 19th, which I already pointed out. You see, we broke below the trade level just like the day before. We have not broken above the trade level ever since. Like the trade level is 26.78. We haven't broken above. We're not going to break above that at least right now. We've got lower highs in the top of the range. Very concerning. We are negative on the 1 day all the way to the 6 month. This is the type of stuff that I'm paying attention to. Like you can see in AT&T exactly what my concerns are when I'm looking at NVIDIA in my previous portion. But I've taken way too long on this video as I've been doing these breakdowns. Tell me what you think in the comments below. If you like these breakdowns, if you like me going through it a lot slower in terms of like looking at individual names and things like that, or if you have tickers that you want me to look at, feel free to comment. Go ahead and like and subscribe. Only have 179 viewers or subscribers. I get more viewers than that, like 96. But I've got 383 videos. I think it's pretty good in-depth analysis. And you can go ahead and follow me on Twitter if you happen to be there. I don't hang out there that much, but sometimes I post stuff. So feel free and follow along. Have a great day, and I'll talk to you soon.